Hello, traders. You are welcome to episode 2 of the week just ended series. And once again, we are focusing on EURUSD, the one weekly chart. So based on that, this is a particular week that we are going to be focusing on in this video, being the week just ended. When we switch to the daily time frame, if you can recall, we did predicted that this particular high, this lower high, will be most likely traded through because it was most likely used as liquidity inducement after we have this break of structure here, okay, and then we have this very nice range, here, okay, and you can see that price is actually reacting from premium, which is very good, but then we expected price to do what? To create this lower high, to create a lower low. As long as this lower high could not create a lower low, then it is most likely a weak high. And so we can easily predict that the market is going to run through it to clear the buy side liquidity. Okay, with that said, we are going to look very closely into the week just ended by scaling down to a lower time frame. Before then, we have Friday, Thursday, Wednesday, Tuesday, Monday, and we can see what happened. Monday created this doji. Friday was an up. I mean, Tuesday was an up close candle. Wednesday was an up close candle, and then we have this bearish move on Thursday, and finally we have the doji on Friday. So what can we really see here based on the daily time frame? See, the week actually started here, and you can see that there was a gap. There was a gap. It's a little gap here, and what we can notice is that Monday recorded the low of the week. Then we are having higher lows and higher highs, higher lows and higher highs, and then we have this higher low creating this higher high, and eventually on Friday we have a change of character from this point. This is where we have the change of character, okay? Because this low, actually created this high, and then this is supposed to be a strong low. But as soon as it is violated, we have what? A change of character, which could mean that market wants to pull back as we may expect in the week going forward before most likely taking some of these highs. Okay, you can also recall that we marked this supply zone that is here in our previous analysis. We marked the supply zone that we can see market actually reacting from here. So this week, this could most likely be a liquidity inducement to this point of interest that is marked here. So this could be liquidity inducement. But I did say, if you recall, that I will not so much trust these to hold so well or so confidently because of this, imbalance that is here, and price most likely, this zone most likely is resting on liquidity. So there's a possibility of price to do something like this, tap into this imbalance before continuing, before making the continuation downwards. Okay. With that said, we are going to look at the we are switching over to the 1 hour time frame or maybe the 15 minutes time frame to actually analyze the opportunities that we can get in this week just ended. You can recall that in the previous episode, we explained why this move, this manipulative move, sorry about that. We explained why this manipulative move actually occurred. And now on Monday, the early hours of Monday, we succeeded, price succeeded in running this liquidity, this high that is here. So we have a break of structure there. And after the break of structure, you can see clearly that we started having a good pullback. And in that case, we have a trading range. We have a trading range like so. Let me just extend it. Okay, we have a trading range, and you can see very, very clearly that market didn't get to the premium of this particular, sorry, the discount of this particular range. To be frank, last week was very aggressively bullish, and as you can see here, we can still capitalize on taking trades by looking closely at the structure that was formed. So we have a high here, then we have a low, we have a lower high. Then after the break of this low, what do we have? Sorry, we have a break of this low. After the break of this low, we have a lower high to form a new low. This is a new low. Okay. Then after the break of this low, we have this lower high to form a new lower low that is here. And then after the break of this lower low, this particular lower low, we had what? Form a new high that led to the formation of this lower low. So that's our structure. So this happens to be the most recent lower high. Okay, and if, as we can see, price eventually violated it, then we can say that we have a change of character here. Okay, we have a change of character here, and we can start looking for bullish. With the change of character, even though price is not hitting the premium, the discount yet, we might have actually entered um, or start looking for opportunity to go long. And some of us could have easily, captured this opportunity, you know, to buy here because market now is reacting from discount. You could have captured this opportunity like so to buy from here and eventually target this high as your first purchase and so on and so forth. That would have been a nice opportunity to trade as well. Um, but in the meantime, we could also have noticed this imbalance that is here. There's this imbalance that we can notice here. Sorry about that. There's an imbalance that also clear. Notice this imbalance here. And once price, this is a kind of you have to be very confident to trade like this. Like I want to explain now, you have to be very confident. You can see this particular candle, you know, manipulating these lows. And why did we say it manipulated these lows? Because it traded lower than these lows and then closed above them, above the lows. So if you can be more confident to trade this way, in that case, you are going to make this your strong low and don't expect markets to actually validate it. And you can target this high, can target that high to have a much better opportunity. This is when you are back tested enough and you have confidence that things like this to play out. Okay. So apart from that, we are done with Monday opportunity, and you can also see that we have this break of structure here. Let me just delete these things first. We have this particular break of structure that is here. As you can see, we have this break of structure. Then we have a new range. So first of all, we look at um, this range to this point. Let's look at it carefully. So you can see that this is still very shallow. We can extend it to this point. And what do we notice? That price was actually now trading from discount. Once again, if you are very confident, you could have taken a trade there based on the fact that we have this imbalance that is here and also this imbalance that is this fair value gap. Market traded into the imbalance and also did manipulation by this particular candle. This candle traded below these lows and closed above them. So once again, you could have traded from here if you have that confidence, and which you can only get from enough back testing. You can have traded from here, and then you can see how the market actually fell. Maybe you should be able to locate a possible target like this area, target a nice, and you could have gotten close to 10, above 10 arrows if you have targeted this area based on this kind of trade. So these are the opportunities that are available on Tuesday and on Wednesday. On Wednesday too, we have a bullish day and up close candle on Wednesday. Um, in the London session, this is what we have. Wednesday looks so difficult to trade, I must confess to you. Never give us that real opportunity to actually trade. But then in the New York key zone, we have this dip, this kind of pullback, which is also very shallow. Okay, and let's say we have formed a range here after this break of structure on Wednesday. We form this range after this break of structure, and I did mention to you that after a break of structure, we start seeing range um, structure. So the market started forming this range structure this year. If we can maybe scale down to the lower time frame after Wednesday, let's see what happens after the break of this. Yes, this is Wednesday. Let's scale down to see what's happening. Market started forming this range structure, this upper structure, and it is very clear. You can trade this range structure very, very well. You see, you can see it in the market. You can see this structure. You have this structure. You have this structure. After this break, we have a very nice range that is here. Sorry, a very nice range. The market reacted from discounts, and once again, you can see this liquidity grab here, which actually made sense. This could have been your demand zone. This could have been your demand zone. Okay, could have been your demand zone that the market actually traded into and made this very nice move. Don't forget, we are still looking at the range structure. Then again, after breaking this high, we form another range, another very beautiful range. And each time you're going to be seeing that we reacted from this kind, and there's always this, this liquidity grab that we can notice very, very clearly. You know, sorry, this top ons here. We have this top ons. Okay, you can almost always notice this top ons. Sorry. So we have this top ons as well. You can see market is following the same pattern, and in this case too, we have an imbalance. We have an imbalance that the market actually traded into. You can see we have this imbalance that the market traded into as well, and clearing this, and so that's how we made this very nice move, though you cannot trade all the opportunity, and we continued. So from this point of manipulation, this is supposed to be a strong low. Okay, it's supposed to be a strong low, and once this low is violated at this point, we delete everything. Once this low is violated, we can see most likely that we have a change of character here. So we have this change of character after that low was violated. So once we have the change of character, it is actually signifying to us that we are either. So one of the mistakes I also made was to think that the market changed character simply for the sake to get into um, into the discount zone, so that we can continue the upward move. That is why it's very important for us to always consider confirmation entry. So what happened? Market changed character here, and even finally violated this low. Once we have this low violated, then we have a change or a break in market structure. Okay, we have a break in market structure. Then we have a new range created. That was on Thursday. We have a new range created after this break of structure that is here. Okay, we have a new range created. After the break of structure, we started having what? Nice opportunity. We started having this range structure. Okay, we have this structure here. We have this structure, have this high, and then we have this low. So we have a very beautiful range structure. And what happened? This is the range. As you can see, market has not got into premium. So if we extend this once again to this, after this low, market did not get to premium. Then after this low, what happened? Market actually got to the premium price, although slightly, and then we could capitalize on selling from here if possible, because market is now at the premium price. But then what I am noticing very clearly is that this high did not create a lower low. This high did not actually create a lower low. So I am looking at this move to actually come in to clear this liquidity going into um, next week. Okay, this inducement high. So that was how Friday movement actually took place. So you can always link the days together and see how they actually connected. They are actually connecting. Okay, they are actually connecting following market structure. So I just believe that anyhow, if the video is not properly coordinated, but I believe that you must have gotten one or two value from the video. And if that's the case, please subscribe and like for more opportunities. Thank you and wish you the best.